Hello, I'm Adam Grimes and welcome to ChartSchool. So I want to share a little snippet of a video I did for my subscribers and clients yesterday. That's December 12th, 2018. This is a little bit of a trading lesson on a setup in Treasury futures, how we set up the trade, and some of the more subjective elements in pattern reading. But I hope you find it interesting. If you'd like to see more of this work, go to marketlifetrading.com. Love to have you check out Market Life Premium. All subscriptions begin with a free trial and absolute ironclad money back guarantee. That's marketlifetrading.com. And here's the chart school lesson. We were stopped out of after a very, very solid profit. This is an easy trade. And this is a trade that if you did not make the trade, that's fine. But it's a trade that you want to understand. And, you know, I'm thinking about, basically what I've been thinking about with this trade is, I know some of you missed it, and some of you came to me and said, oh, I wouldn't necessarily have seen that. How did you see it? And so I've been thinking about what the difference is, you know, what I saw that you might have missed. And I think it really comes down to, this is not typically the type of flag that I like to play. You know, I like to see something that's a little bit more extended of a trend, and one of the things that I do like to see is that we pop to the outer Keltners. For instance, for a short, this is a really good short setup here because we pop to the Keltner channels also here. See that? And then this is not a setup because we spiked off the top too quickly. This might have been a setup, but it was not because we came back too hard there. So those are examples of what I would say are kind of textbook Adam Grimes setups. That's the bread and butter trade. Now, you look here, and we didn't have that. But we still, why did we identify this entry? I don't know that I can really put that into a clear lesson. There maybe was a little bit of intuition driving it. I think that it was probably we had such a nice setup, not here, you know, I just showed you we snapped back too quickly, but then we had this complex bear flag, which I don't know where you would choose to enter, but somewhere this is probably too high, this is probably too low, so somewhere in this area, just do a big scribble, you short. Let's kind of say you have the ideal short, which might be a short entry on that bar. See that? And what did you get for all of that work? Nothing. You ended up, if you shorted here, you ended up looking pretty stupid a few bars later, and that's, the market does that to us. So I think it was, sometimes, I think it was seeing that failure, that way that support, this is not exactly the support level, but close enough, support held, and then granted we didn't have enough upside momentum here. Maybe one indication you can take from this, and I did not read off of the MACD, but the MACD did make a new high, so you did have some upside momentum here that might not have been clear on the chart. Little consolidation, upside break, and then off to the races. So I think that's maybe not a textbook trade, but it's a trade that we certainly telegraphed very, very clearly in the PDF. You had the setup, you had the entry, you had the stop, and then, you know, certainly should have been a trade that you could have traded based on that information. But it's also worth thinking about how you might see trades like that in the future.